In this video, traders, let's look at reversal candlestick patterns, the top 3 ranked. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Okay, so candlestick patterns, super important whether you're beginner trader, intermediate or advanced. To me, they form the trigger of my trade. I have a filter system which allows trades to kind of come into my ecosystem, if you like, and my awareness zone, and the trigger is actually formed by a candlestick pattern most of the time, or some kind of other price action pattern. But most of the time, guys, on a daily chart, if I'm swing trading, it's going to be a candlestick pattern, even a 15-minute or a 5. These are the things that trigger you to actually take the trade. However you operate, I think candlesticks probably play a big part in your trading. All right, so the number 1 candlestick pattern, reversal candlestick pattern. Let's just kind of qualify reversal. Yeah, guys, reversal is really, when the market has come lower for whatever reason, and we're trying to find this point as much as we can within as best as we can. As a continuation is kind of more like that type of scenario. So reversal, we're trying to look for something that when we dissect what the candle is saying, we can look into it and go, okay, actually I understand now what the price action is doing, what supply and demand is doing. And for me, that's always how I kind of reverse engineer and look at what's happening. So number 1 for me is the hammer. The hammer hanging man the other way around is, especially from a daily chart perspective, just tells you so much about what's happening. You just say, right, we've had the open here, close here, but the interesting part is how low this tail is. This tail goes lower. So what's that saying? It's saying, hey, we had lots of supply, and whatever reason intraday, we've now come back up into demand. And if I'm very, very fussy about my hammer, I'd like to see it green on, if we're talking about a bullish hammer, I'd like to see the close at highs. Close at highs is bullish. The fact that we rejected intraday lows is bullish. All these things are bullish. But the also additional thing is the position of the hammer. If you've got a hammer in the middle of no man's land, it's meaningless. If it's sitting in the middle of a range here and you see a hammer kind of there, pointless. If you see it at the end of a big move, like a multi-day move, and then it's even through a level of support or something like that, brilliant, love it. I take those all day, every day. Why? Well, number 1, I think it's a good indication of reversal. But number 2, great place to quantify your risk. Because you're taking the trade on the close, you've got your stop under the low, there's your stop, there's the close, bang, your risk reward ratio is immediately going to be 2, 3, 4, 5 to 1. And that's why it's so beautiful, because not only is it telling you, hey, potentially reversing here, but also it's giving you an obvious place for the stop. If the market comes down and eats the tail, then you're out. If it doesn't, reverses, the chances are that's going to be the low of the move. Number 2, guys, on my list of reversal candlestick patterns ranked is the abandoned baby. Now, this is actually a really nice one, but you don't see it so often. You're not going to see it in Forex very much because it's based on gaps. In stocks, this is where you're most likely going to see this. So the idea is that you actually have fresh air in between the low of candle 1. If we said that was 1, this is 2, this is 3, this is the baby candle, if you like. I don't know where these names come from, guys, no idea, but there you go, abandoned baby. It's fresh air in between the baby and the other 2 candles. So it's basically saying, again, love it when you think about it in terms of price action, supply and demand. What have we got? Bang, supply. Next day, gap lower. Think about the lower gap. Oh, gapping even lower. Supply. And then intraday closing, okay, we haven't filled the gap. But then the next day, there's such a change in sentiment that it's gone from not only supply, not to neutral, but massive demand. Massive demand gapping back up, causing that fresh air in between those 2 candles and the baby. Wow, what a huge change in sentiment that is. That's why it's so rare to get very often. When you do, you're all over it because you see it gapping up and going, well, what a massive difference it was from literally 48 hours ago, however long ago it was. And that instant change of sentiment, that instant change of supply-demand imbalance makes you want to jump all over it. Again, always understanding the price position. If this is in the middle of no man's land, I'm not interested. If this is the bottom of a big move, I'm interested. Again, the quantifying of the risk comes into play. There's my low, there's my entry here. Maybe you want to do it at the close, however you want to do it and pull your trigger, whatever you're looking for the target wise. You've got a quantified, nice risk there, and also a good kind of indication this thing is going to follow through and push on higher. Right, so I like the hammer's my number 1, and Bannon Bay's number 2. Number 3 is my engulfing. You're like, oh, that's a little bit boring, but again, if we're considering in a price position, why is this so nice? Because you've got a few things going on. Again, we have to dissect and think about what's actually happening under the bonnet. You know, under the bonnet, let's look at the engine of what's going on. Wow, we've got selling, 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 and then we gap lower, because don't forget the open of the candlestick is the bottom here if it's green, so we gap lower, but straight away, bang, buyers, not necessarily straight away, but for a trading day, we have a range that engulfs the prior day's range. So not only does it take out the prior low, it also takes out the prior high and closes at the high. That's the beauty, that's a proper engulfing for me, is when the whole body is engulfing the prior day. So you've gapped lower, which is the body, you've closed at highs, and this happens to engulf 2 days, but engulfing the prior days, basically, again, let's think about what's happened, guys. Let's think about it. What's actually going on? We've gapped lower, supply, supply, supply. No, bang. Demand comes straight in, and not only is it taking out the low, taking out the close, taking out the high, close at the high, taking out all those massive key levels from the prior day and closed at the extreme. That's a great, great indication that sentiment has changed into the demand side. And again, if your price position is strong, great place, a great way to trade. The only downside to this, I would say, is sometimes it can be a bit challenging to know where you're going to put your stop. If that's a really, really wide candle, really big range candle, can be too much. You know, the range, if you put your stop under that low, it can be too much because your risk reward might not be so great. So, you know, maybe you kind of, if you can jump on it a little bit earlier, jump the gun, or you use this stop maybe for half of the candle, or if you're going to use a full candle, which is probably what you should do, you've got to make sure you've got plenty of meat and potential possibility for it to, you know, do a good move to the upside to make the risk-reward ratio worthwhile on the trade. All right, guys, those are my 3 candlestick patterns that are ranked: hammer, abandon baby, and engulfing. Let me know if you agree. Let me know what your favorite candlestick pattern is. A link in the description below to our channel sponsor if you want to go and check those out, and comments below if you want to kind of let me know what you think, if you agree or disagree with my 3 top candlestick patterns for reversals. Take care, bye-bye.